All right, let's talk more about what this all means for the consumer. With, by the way, just 87 days to go until Christmas. Joining us now is former Toys R Us CEO Gerald Storch of Storch Advisors. Gerald, great to have you with us. So, Jerry, you think the consumer strength, that's going to trump all? It's going to trump price increases, it's going to trump inventory issues, all of that?
Absolutely. All these pressures are real. Staffing shortages, inflation, logistics, whatever. They're all real, but the consumer is stronger than all of them put together. We've been seeing huge increases in consumer spending when you look at a two-year basis versus pre-pandemic 2019. And I think it's just going to continue on and on well into the fall, certainly through Christmas. This is a wonderful time to be a retailer. I don't care if it's Dollar Tree or Walmart. And the reason is because you are going to pass these price increases on. And you're going to see your top line rise faster than your costs are going to rise. Why? Some of your costs are certainly going up, like labor costs, but your fixed costs are fixed, things like rent. A lot of the rent in a lot of these stores, they're on a 5-year, 10-year accelerator, that kind of thing, or some of the stores are owned. A lot of them are owned by people. And so they have fixed costs for occupancy, rising prices. The arbitrage is tremendous. They're going to make a lot of money across the board. That's what's going to happen. There will be shortages. You want to buy the right toy, you better get it fast because they're going to be out of stock soon. But most things are going to be available and most are going to sell. Scarcity is good.
How do we think about it through the lens of, say, a Nike, Jerry? And I'm not asking you to opine about Nike per se. In terms of their issues with supply, a lot of their factories are in fact shut down because they operate in Southeast Asia. But yet they are able probably to not promote as much as they might have to, or maybe their levels of promotion were fairly low to begin with. How do we think about that sort of offset to not having the inventory?
Great question. Two parts to that. It doesn't mean that every branded vendor is going to do well. Depending upon what they have available, and Nike said they're going to have problems and growth is going to slow because of these supply chain issues in Vietnam in particular. So some of these branded vendors are going to have issues. And some of them are going to do fine. I'm talking about retailers here. If they don't sell Nike, they're going to sell another shoe. The reality is Christmas stockings aren't going to be empty. They're going to have something in them. So retailers are different from specific vendors who may have their own issues. Now, you also mentioned margin, which is the second part to your question. Those are just going to keep expanding. We've already seen significant margin expansion, especially among the troubled apparel and department store sector. We haven't seen that in many, many years, where basically, again, because of shortages, they haven't had to discount as much and their margins have been going up. I believe that's going to continue throughout the fall. We see throughout the holiday period. I remember one of the old saws in retail, old stories is that your most profitable hours are on Christmas Eve in the daytime when all the husbands come in to buy their wives presents and you're out of stock on a lot of things and they're absolutely desperate. They'll buy anything and they'll pay anything for it. It may not be what she wanted, but they got to come home with a present. And they do. And your margin is huge and your sales per hour are actually even bigger than they are on Black Friday. So think about it this way. Each of the days between Thanksgiving and Christmas, they're kind of like Christmas Eve day. You better go out and shop if you want to buy what you want. And margin's going to expand significantly.
Hey, Jerry, how do you see this playing out? Do you see workarounds as far as the supply chain? Do you see sourcing move away from China and to different countries? And then the other question is, for Christmas, do you see the return of brick and mortar and them being a bigger piece of the pie versus digital online?
Okay, again, two great questions. First of all, I've been saying for several years, this began back with sort of the Trump tariffs on China. That'd be management malpractice not to diversify sourcing away from China. So everyone's been working hard to do that. And that's one of the things you remember, Nike's problems are in Vietnam almost more than China right now. So, one of the things that everyone's been doing is trying to get multiple sources of supply. That's only going to continue. By the way, it's really been the pattern for decades where sourcing tends to chase low costs, and China isn't necessarily the lowest cost to manufacture anything anymore. So we all expect India to be more significant than it's been in the past. There are other countries that are coming up in Latin America and North Africa. Depending upon the product, it'll be manufactured in multiple places. That's capitalism. It works. It will diversify. So I have absolutely no doubt that's going to occur. I'm sorry, what was the second part of your question? I forgot.
Brick and mortar. Do you see that becoming a larger share?
Yes.
As we're
well, last year we got hit with the second wave of the virus. You may recall there were a lot of lockdowns in some key states like California. That could happen again with Delta. It's not what I'm seeing the numbers. I monitor them very closely. I'm sure you do too. We're seeing it come down, and so we have to watch the Northeast. in California for what happens over Christmas times when people start going back inside a little more. But we don't have a big uptick due to a Delta variant. The bricks and mortar will definitely be huge. We had a very muted Christmas last year in bricks and mortar retailing due to the virus. I don't expect that this year. Again, it's not out of anyone's control, so it's out of everyone's control. We'll have to see what happens. But I do expect bricks and mortar to be a lot stronger. Meanwhile, one of the most enthusiastic or exciting things that we've seen is that about half of the supercharged internet growth that we saw during the pandemic has stuck. So we're seeing big increases of all kinds of products purchased on the internet, including groceries, where you kind of wonder, would everyone ever, when they go back to grocery stores, do they still shop online? We're seeing big increases there too. So I think e-commerce got accelerated by a year or two. But having said that, this would be a huge bricks and mortar Christmas, which, by the way, is why I keep saying, keep in mind, it's hard to do, but go back to 2019, transport yourself back. Who were winning back then? Those are the people that are going to win when you come out of this. It's not like the world changed that profoundly. That's why I like people like a TJ Maxx, for example, TJX I've been talking about lately. Why? Because they're a fantastic retailer, almost entirely dependent on bricks and mortar, though it really doesn't work online to have that kind of a treasure hunt. So when people go back to the stores, they're just going to take off like a rocket ship. Everyone's talking about Dollar Tree today. I heard you talk about it a lot. But look at Dollar General. They're barely up this year. So what you have to look for is the stocks that are up 20, 30% year to date. Dollar General, TJ Maxx, Walmart, barely up this year, and Amazon themselves. I think those are stocks with still room to run because all votes are going to rise for the Christmas season. Go ahead.
Jerry, great to have you with us. Thanks for your time.
Yeah, my pleasure.
Jerry Storch, Storch Advisors. Jerry just rattled off a bunch of stocks.
Yeah.
Tim, are you buying what Jerry's buying?
Well, first of all, I'm buying Jerry's view on the holiday season. A name that I think is really worth looking at is Mattel. This is a name I've liked for a long time. It's gone through a painful transition process. One of the things Jerry talked about with regard to fixed costs and rent, and a lot of these folks, not in the case of Mattel, but now have restructured a lot of those lease deals. In the case of Mattel, they went from being sold in stores like Toys R Us now to having DTC access. These guys have restructured their business. They have brands that are growing. They're going to grow probably mid-single digits. And I think the toy companies, for example, despite some of these shipping issues, are well positioned for a very strong holiday season.